Alright, so guys, Jeff here, back again with another video. So today, we'll be talking about what happened at the FOMC meeting. But first of all, let me just bring you guys up to speed. If you guys have already seen this statement, or well, chances are you guys might not have seen the statement yet. But if you guys want to just go through a statement, basically TLDR, the entire statement basically just means that there will not be any increase in rates in general, and because there won't be any increase in rates in general for now, that means that basically the market is very very happy about that. But a very very big but is that Jerome Powell came in with the Q&A, and if we are talking about tone checking, I wouldn't say Jerome Powell was exactly hawkish, but he was by no means dovish at all. All right, so what I'm gonna be talking about will be basically what actually happened. Okay, first of all, they talk about the persisting supply chains that has been happening. Okay, so the things that for the persisting supply chains, all of us we actually already knew about it to a certain extent, because even GE came out with their earnings report and they said that supply chain is going to be persisting. We already heard about persisting supply chain from all the chip manufacturers or the EV manufacturers. We know what's up, okay? We know that this is an issue that's going to be going all the way to 2023. And even Jerome Powell, deeper into the entire Q&A, he actually reiterated the whole point, saying that, like, I'm not sure who told you guys that supply chain is going to be easing in 2022. I don't think so. So he even says that 2023 probably will see some sort of easing happening then. Secondly, he talked about higher COVID cases, and I'm pretty sure that we all know about the COVID cases as it is. In the US, we saw a lot of a big hike in COVID cases. However, Jerome Powell did say that right now the COVID cases might be going up, but chances are it might probably go down. But Omicron is still going to be affecting the market for the in the short term, because higher COVID cases basically just means more stress on the hospitalization and also more so-called stress on the labor market as it is. Thirdly, he said that inflation is going to be staying. Something that is very, very big that he actually said is that as compared to December's, PCE, they use PCE, which is the consumer spending. And for us, I like to use CPI. But basically, you were saying that there's going to be higher PCE forecasts than expected, aka more than what we actually had in December. And FYI, December was horrible as it is. So if he's saying that this is going to be worse than December, I don't know what are we going to be expecting from this PCE. We might actually see horrendous result if the inflation continues to go on to this. All right. Fourthly, he did say something that is actually surprisingly good. Okay. Hold on. Since we're not talking about this anymore, he did say something about this, which is surprisingly good, which is balance sheet sell-off will only start after rates hike. Okay. So earlier in the statement, he already said that basically we are not going to be increasing the rates. Is going to be at a 25 basis point, aka a 0.25%, and that is not going to be increasing yet until we finish tapering, aka the 16th of March. After that 16th of March, the next FOMC, which is probably in the March FOMC, they will then announce that the rate is going to go up. That's usually when we kind of see some sort of volatility in the market as well. So that's going to happen. The first question basically asking about the possibility of a 50 basis point, or is there any sort of roadmap on how we can actually see the interest rate going in the near future? And honestly speaking, Jerome Powell kind of punted on it, so I don't really care about that much. The second question was max employment. The interviewer basically asked, all right, so right now, we understand that the Federal Reserve wants max employment. I already said it in the video before the FOMC meeting that I uploaded. I already said the Federal Reserve wants max employment, not max unemployment. Max employment, okay? They want max employment. So if they want max employment, the interviewer basically asked, then does that really make sense for you to be increasing rates? Because like what I say in my video as well, this doesn't really work that well towards the whole labor market. But this was the thing that basically destroyed the entire market. We saw everything down. Nasdaq, your S&P, your Dow Jones, everything trended downwards on literally on this thing alone. Okay, Jerome Powell said that we are in a tighter and tighter labor market as we go along. Okay, and because we are going in a tighter market as it is, there's a lot of space for us to increase rates. AKA, if the dot plot comes in the next month, they can easily come in. All right, we're going to be increasing the rates 4 times. We're going to be increasing rates 5 times, 6 times, 7 times. It doesn't matter, because right now, how it kind of works is that if the labor market right now is at, let's say, 95%, right now they're saying they're like, okay, if it's at 95%, right now, if the rates, that the space that we have in order to increase the rate is currently at, let's say, 60%, it's all right. I can still continue to raise rates. Let's just say every single time I raise the rates to 1 time, the labor market maybe drop by 5%. And because of that, in the Federal Reserve eyes, basically they are like, we can deal with 85% for the employment, even if that were to be the case, because eventually, if we are able to bring down inflation, we can just solve the pressing issue, which is the hyperinflation trending. If we can fix this issue, basically the whole max employment issue we can solve afterwards. So what they're saying is that if we do not have to care about the labor market, we now only have to care about raising rates. And right now, because we with this said, basically it just kind of implied that Jerome Powell is all right with kind of increasing the amount of rate hikes that we're going to be having in 2022, which is why that kind of destroyed the entire market. Afterwards, he did say that if inflation were to go up, he would definitely be addressing the whole basis point increment for the rate hikes, which aka means that 50 basis point is finally on the table. 50 basis point rate hike is finally on the table. This is why there's so much fear in the market. Before this actually came out, 50 basis point were basically just a rumor, basically just a myth concocted by all these analysts by Goldman Sachs and Morgan Stanley. And now 50 basis point is finally on the table. And that's why there's so much fear in the market. Okay. And afterwards, in the statement itself, let me just bring up the statement one more time for you guys. Over here, they did say, all right, allow modest deviation from the stated amount for purchase and reinvestment if needed for operational reasons. Okay, so the CNBC analyst basically asked Jerome Powell, like, why do you actually add this in? And Jerome Powell basically just said, okay, this is just basically just for general admin purposes. It just gives them the so-called way out if they really wanted to. So the balance sheet, because this is basically asking due to the balance sheet, and we do not know when the balance sheet runoff is going to actually begin. And if they actually have this clause in there, basically Jerome Powell is not really lying to us if he wants to just be like, all right, you know what, the balance sheet is going to start selling off on February, and that's going to cause a lot of panic in the market. Okay, so yeah, that's kind of what's up. All right, then afterwards, Jerome Powell continues to talk about the uncertain outlook in the market, which, honestly speaking, I feel that this is kind of becoming more and more like a pattern. For example, we're looking at earnings. A beat in earnings increased the market value, and then right after, the forecast destroyed the market value. Right now, it's the same thing. We got our statement from the Federal Reserve, and then the Q&A destroyed the market. So I think outlook in general right now in 2022, people do not want to look at the present, nor do they want to look at the past. They want to look into the future and try to get a hold of information as much as they can. All right. So afterwards, Jerome Powell also did say that, right. Okay. He actually reiterated the entire labor market being a very frothy, a very tight labor market, which is why we don't have to worry about. And then the last question that actually made me, well, I wouldn't really say happy, but the thing is I'm happy that this question was asked, was that someone actually asked, if that's the case, would the government basically giving too much stimulus into the economy be a good thing? should they actually have not given that much money into the economy, and that's why we're actually having this problem now. And Jerome Powell basically answered it in quite a normal manner, which is like, I think is quite robotic to a certain extent. He actually said that Congress actually did a good job because the care package basically helped a lot of businesses. And when the global pandemic actually started in 2020, about the March and April period of time, lockdowns were happening, business was closing down, people were actually going to debt. So I can totally understand to that certain extent, and that's why I feel that, of course, the care package definitely needs to go out to other people. But I feel that at the end of the day, all these care packages going out to the people, all of them are just going to end up at one of your big 10, your top 10 companies in the US anyway. So yeah, I think too much stimulus definitely did play a part in this current hyperinflated economy that we're actually going through right now. So can't really complain much, since that right now this is more like spilled milk. It's more like how the Federal Reserve are going to be handling this entire issue. But yeah, basically that's the entire FOMC meeting. The statement and the Q&A. Right now we are expecting the minutes to come out on the 17th of February, and then 16th of March will be the next FOMC meeting, which should be the most important one of them all, because basically we will be looking at our first rate hike during the FOMC meeting. Of course, I'll also be covering that if nothing happens, which chances are nothing's going to happen. I'm definitely going to be there anyway. I think that this is very, very interesting for me. But yeah, basically right now I'm just looking at the market. The market is kind of trying to recover, but it's not. Which is why my put position, surprisingly, are the one that are the winners again. Earlier in the day, my puts basically were like the biggest loser, and all my long position were making me the most money. Right now, my puts are the one that's making money, but overall, my entire portfolio is still down because I put a lot of money into my long positions. My puts are basically just a form of hedging, and yeah, let's just say the hedge worked out, but I'm still down on my portfolio. So I'm definitely not happy to see what's happening to the market right now, especially with Apple kind of just trading on the 158. I do have puts on Apple, but yeah, I think Apple's going to be a tough one as well, because Apple also have another earnings coming up on Thursday. Well, even essentially, tomorrow, I guess. And because Apple earning is going to be very interesting, I feel that Apple might actually miss this earning, similar to how they actually missed the previous earning, because Apple has always been talking about the supply chain issues, and I think that this whole supply chain issues being a persisting issue tend to be this certain trend that we've been hearing in a lot of earnings. Because of that, I feel that we might most probably be hearing the same sort of tonality in a lot of all these earnings. But okay, anyway, I don't want to ramble on anymore, because Tesla earnings is going to come out soon, and I kind of want to go through that a little bit before I go and sleep. But anyway, thank you guys for watching, and I'll see you guys next time.